Hi everybody, Marco Carvalho here from Business Credit Builders with an S.org. Today's video, we're going to talk about what is the best business bank account for your small business. So if you're a startup and you're looking to open up your first business bank account, or if you're an existing business owner and you're thinking about changing banks, this is the video for you. We're going to share with you the types of banks, what types of bank accounts can you get, and how do you identify what will be the best type of bank account for your business. So let's get started. So first and foremost, I want to talk about the benefits of having a business bank account. Obviously, in this particular YouTube channel, we talk about separating your personal credit from your business credit. That starts at your business bank account. Okay, so it limits your personal liability. You want to separate your personal and business finances. That's so crucial. So that's the number one thing in setting up a business bank account. The second thing is you're going to limit your personal liability, but the second thing is professionalism. Having a business bank account, you're writing checks, you have your company name on there. That's a very important element to having an actual business, is you want to have an account in your company's name. And then your credit options. Now, one thing with having a business bank account, you're establishing a relationship with a bank. Okay, so there's going to be credit products that financial institution offers you that you can use for your business, like a business credit card they may offer, or a business line of credit, or even offering business loans and a debit card, etc. So you have credit options that you'll benefit from when you open up a business bank account. And the fourth thing, which doesn't get spoken a lot about, is the importance of a relationship with a bank. Okay, so when you open up a business bank account for your new startup or your existing business, you're now establishing a relationship with that bank. Okay, and lots of things can happen from establishing relationships with a bank partner. They obviously have a track record with your business. They can see your bank account history. They can see the relationship that you have with you as a business owner. So that opens you up to many more opportunities in the future. So don't negate the power of establishing relationships with banks. So that's why your bank account is going to be one of those relationships that are crucial for your business. Now, also having a business bank account, a benefit is your funding ability. Now, when you apply for funding products as a business owner, many of the things that they look at is your bank account. They look at your bank statements. Okay, so your bank account is going to play a crucial role in many types of funding products. Your bank account says a lot about your business. That shows how much revenue is coming into your business, how much deposit activity you have in your business, what's your average daily balance. Do you have an NSF history in your business bank account? How long have you had your relationship with your bank? So that says a lot about you. And there's many lenders out there, including fintech companies, that utilize your bank data to issue loans, lines of credit to your company, even credit cards to your business. Okay, so your bank account is going to benefit you in many, many ways. So these are the main key benefits I want to capitalize on here in this video. Now, in here, let's talk about the types of banks, because there's so many different types of banks. In the left column here, you'll see we have the central bank, which is nowhere where you open an account with the central bank. Obviously, you know they're in charge of monetary policy here in the United States, etc. There's investment banks, savings and loans. So that's really banks that you're not, that really doesn't apply to this particular video. For you as a business owner, the right column here are more banks that cater to you. Now, there's more specific banks that I highly recommend compared to other banks. First, you have your national banks. You can see that your national banks are major banks like Chase, Bank of America, Wells Fargo. They have branches all across the country. They're known as national banks. Okay, your money there is FDIC insured, excuse me, and then you have your local banks. Local banks are more service to community, and then you have your credit unions. Credit unions are member owned. We're going to get into a little detail about credit unions. You have your online banks. Online banks obviously is something that is moving up in popularity. There are some negatives to online banks because you don't have that actual physical locations. You don't have that relationship building potential with the online bank. But the cost savings, because they don't have brick and mortar locations, is they pass those savings on to you as a customer, and then they tend to have higher benefits, savings rates, They give lower rates they can offer you. Then you have commercial banks, which are more business funded banks. They deal mainly with big companies. And you have cooperative banks. Cooperative banks are banks that serve underserved communities. Credit unions also fall under the cooperative banks as well. Okay, so these are the main types of banks, and the most popular ones, though, are your national banks and your credit unions. Those are your more popular ones. Now, there's types of bank accounts that you need to be aware of as a business owner. There's your checking account. There's your savings accounts, your money market account, certificate deposit, and of course there's other accounts like a merchant account, but we're going to stick with some of the basics here in this particular video. Now you'll see with all these accounts that are offered, you have personal and business. Okay, so when it comes to deciding what type of bank should you do business with as a startup or an existing business, you have to kind of break down what are going to be your needs. I'm going to go into that in a minute here. But as far as a more broader explanation is, first and foremost is ask yourself, where have you been doing your personal checking, your personal banking at right now as a business owner? See, you may have a long-standing relationship with a credit union. You might have your personal checking account there or your personal savings account. You may have gotten a car loan from your credit union. So that's where you have your personal checking at and your personal account with. So it's to your advantage if your credit union where you already have a personal relationship with, you have history with them, if they have a business division, they have business checking, they have business credit products, etc., that would probably be a great advantage for you to leverage that existing personal relationship and also open your business checking account with your credit union that you have a personal account with. So that's something you want to consider, is leveraging that existing relationship that maybe you already have. What if you have a personal checking account at a national bank like Wells Fargo or Bank of America, and you've been banking with them forever, you're starting a business? Should you open a business checking account with Wells Fargo if you have a long-standing personal relationship with them? Well, absolutely, that's something you can leverage as well. Even though they're a national bank, you have relationship there. But remember this, though. Some of these big banks, they like big businesses, and they may not cater to you as a small business. So there's a trade-off there. You want to make sure that that national bank can cater to your small business. So many times these national banks may not offer funding products unless you're 2 years in business, you have a solid track record. So you may also want to look into having another bank account with maybe a credit union on top of having a business account with your national bank. Okay, so there's no problem with you having several business checking accounts for your company. But remember this is important. Your checking account activity is going to be a big factor when it comes to your funding ability. So if you have two business checking accounts, one at a national bank, one at a credit union, and you're trying to apply for funding, the lender or the bank is going to look at your activity at your checking account. They're going to look at deposits, your withdrawals, your average daily balance, etc. So just take that into consideration, okay? So with that said, you have your national banks, local, and credit unions, online banks. Now, I want to get into here is your types of bank account, things to consider, which is very important when you're deciding where should you open your business check account, or if you already have a bank account with a national bank, let's say, and they denied you for, let's say, a line of credit, or they're not catering to your business, they don't have enough funding products, or they turned you down for a business credit card. They're really not helping you as a business, and you're looking to go take your business elsewhere. So I want you to look at these things to consider as your fees and minimum balances. Okay, what do they charge? Do they charge you to have a business checking account? Do they have zero fees if you maintain a certain balance? Can you maintain that certain balance in your business checking account? Many banks may have a free personal checking if you have your business checking with them. Okay, because some may even charge you a maintenance fee every month if you have your personal checking with them, but if you have a business account with them, they charge you no fees. Okay, so you have to make sure you check those out when opening a business bank account. Digital tools, do they cater to the tools you may need as a business owner? Is your bank account able to be set up with your QuickBooks that you have? So does it have online banking, which pretty much every bank offers online banking, but does that automatic bill pay? Does it cater to the things that you need as a business owner? Customer service is huge. Many people may favor an online bank because of its simplicity in opening up the account, but what type of customer service are you going to have? Are they going to be able to cater to you there? Then you have your business credit products. This is huge because there are actual credit unions that don't have, or even banks that don't have a business division, or they don't offer business credit products like a business line of credit, or they don't offer a business credit card. So if you're going to have your bank account there and they don't have the specific products that you know you're going to need as a business, then you may want to consider another bank. Okay, so do they offer these options for you for your business? Then you have ATM access. National banks, you have ATMs everywhere. Okay, if you're at an online bank, they don't have the ATM, so you're going to pay a little extra fee when you're pulling money from an ATM. So those are things you want to take into consideration. Number 6 is huge for me, is your branch access, and that's your relationships. I can't emphasize enough of how important it is remember, behind anything when it comes to getting approvals, there's someone who's an underwriter, there's a relationship with their banker, all those things, that's relationship building. So if you have a bank that you want to do business with where you assign a relationship manager, some big banks have that, but you have to be a big business to get assigned a relationship manager. But when you go more into a credit union or a community bank, they're more personable. You have more of that relationship built there with a one-on-one with a person who's going to be that you can meet with. Get to know you. They get to know your business. So I love that component with credit unions and community banks. Okay, so really factor that in, especially if you're a small business or a startup. The other thing to factor in is your cost of merchant services. That's if you plan to have your merchant account set up with your bank. Many people opt to use other services like PayPal or Square. I mean, there's all other types of ways to accept credit card payments from customers. That's fine. But if you're going to use your bank, make sure you check in the cost of merchant services before you open up your bank account. The next thing is what are you going to need to open up a business bank account? You're going to need your company formation document. So if you're incorporated, which I hope you are, that helps you create your separate credit file. It limits your personal liability. You're going to need your formation docs when you go into the bank. They're going to want your employer identification number, which is your CP 575 form from the IRS. They're going to need that. They're also going to want your business license if it's required for your particular business. And they're going to want your personal identification number, who's in charge of it. You have to fill out some forms. But that's really basic. And of course, they're going to want an initial deposit. So, I mean, you can open up a business bank account with $50. That's the minimum documents you're going to need for opening up a business bank account. Now, I want to talk about the most popular one, which is banks versus credit unions. Is my bank going to be able to provide to me the funding that I need to grow and scale my business? And there's two sides to that. As a startup or small business, you have credit unions, and then as a big business, you have big banks. Okay. Now, the one thing to remember is banks are for profit. They're there to cater to their shareholders. With a credit union, they're there to cater to the members, which is you. Okay. Credit unions are not for profits. They're member owned. Okay. Your money is still insured with the banks. They're insured by the FDIC. With credit unions, the NCUA. Okay, your money is still insured up to $250,000, so your money's protected there. With customer service, credit unions are more relationship driven, which is what I like. Okay, national banks have many branches, but credit unions have fewer branches, so that's a trade-off there. But your rates and fees are going to be lower and fewer with credit unions because remember, credit unions are there to pass on savings to members, where banks, those fees and everything, that's money they want to make for their shareholders. Okay. Now, the other thing which is really important for you is what about funding products, loans, lines of credit, credit cards? You're going to have much more flexible underwriters and guidelines with credit unions compared to big banks. I can't tell you how many times we have business owners that are doing good revenues, but they can't even get a line of credit with their bank, and they're dealing with, let's say, a big bank. Okay, because they're not doing enough revenue, or their business is not profitable enough, or there's too much paperwork to get approved for a traditional line with a big bank. Whereas we have business owners that have lines of credit with their credit unions, and they were approved with less restrictive requirements. Okay, so there's a trade-off, and you can see I'm leaning towards credit unions. I just love the fact that they're member-owned and they're there to cater to you, not to shareholders, okay? So that's just my personal preference. Now, to talk about credit unions, they're community-based. They exist to serve its members. They're controlled by we the people, the people who are members, which is what I love. Reduced fees, higher savings rates, lower loan rates. They operate like banks. And now with credit unions, you're able to join, but there's different types of credit unions. You may be able to join based on your employment. Okay, so like you have teachers credit unions, and then you have family geographic location, their membership in a group. Like there's Navy Federal, which caters to like military. Then, like if you have a military family member, they can also get you into a credit union if it's if you're a family member or someone who served in the military. Okay, so now there's a credit union locator. If you're not sure, how do I find a credit union around me? You just go to that link there, and this is the sample of the link. And you can type in your address, and they'll give you a list of all the different credit unions. You can search by state. So, like for example, if you typed in Florida, and they're going to list all the different credit unions here in Florida, a whole bunch. But you obviously want to narrow that down by city. You can narrow it down by zip code as well. Okay, but that's a great search tool for credit union locator. That's mapping.ncua.gov. I want to also touch on what lenders look at when it comes to your bank account. Okay, because your bank statements, your bank account is going to play a big role in certain types of funding products, revenue-based loans, lines of credit, business loans, etc. So lenders will look at typically 3 to 6 months of your company's bank statements. Even when you're getting a company vehicle in your name, if you're going to go to a finance a dealership, they might want to see your past 6 months of bank statements when it comes to underwriting and to seeing if your business has sufficient revenue for you to get a vehicle in the company's name. So they may most likely look at your bank statements. Sometimes they might ask for your tax returns, but many times it's just your bank statements. Average monthly balance is one of the key data points they're going to look at, and your average monthly deposits. Deposit activity is key. Okay, if you're only making one deposit a month coming into your business, it doesn't mean that's a bad thing. But if you have lots of deposits coming in with lots of activity, those are indicators for them. Average monthly withdrawals, and they look at your total outstanding debt and your NSF history. Now, it's always good to have a good balance in your business checking account. You don't want to zero it out every single month. I recommend having a decent sized balance. 5,000 or more is ideal, in my opinion. Shows that your company has some good stability. You have some cash sitting in the bank. You may even have a business savings account as well, or a money market account for the business. So those are things that you can have with that same bank if they offer it. NSF history is important. You don't want to be bouncing checks. That's a negative. There are some fintech lenders that will overlook that NSF history, but I want to cover this particular slide because I wanted you to realize that your business bank account is a very important element in your company's funding ability with a lot of traditional funding products, even many fintech lenders, and as well as fintech business credit cards. Okay, because there's many fintech business credit cards that will look just at your bank account history and not check your personal credit if you have good revenues coming in. The one thing I want to also talk about is the amount of revenue you have flowing through your business checking account. Because many people say, well, if I open a business checking account, can I get a business line of credit right away? I only have a couple $100 coming in through, or a couple like 4,000 or 5,000 a month coming into my business bank account every month. Remember, I mean, even with fintech lenders, they want to see at least 10,000 minimum coming through your business checking account every single month. And that's fintech lenders. So imagine the requirements with traditional banks. So just remember, put this in perspective. It's all about revenue. Your business has to have the revenue to support and repay on a line of credit when it comes to a traditional line of credit. That's why business credit cards are so popular, because those are stated income products. They'll look more at the strength of the business credit and your personal credit to issue much higher credit lines for your business. So that's a little snapshot and importance of your business bank account. So if you found this information helpful, give us a thumbs up. And if you're looking for ways to get funding for your business, if you're a startup or you're even in an existing business, you want to know what type of funding products can you get, what type of funding, check out businessfundingreview.com. We don't pull your credit to do a review. You just supply us a copy of your credit report. We do a full analysis and present to you funding products such as lines of credit, loans, business credit card funding, etc. We also have a business credit building system. So if you're looking to build up your company's credit file, check out our step-by-step business credit building system, where we provide you access to many different sources for building business credit for your company. So with that, we appreciate you watching this video. Give us a thumbs up. Talk to you soon and make it a great day.